So the war in Iran is escalating. Or is it? There are words of war coming from one side, there are words of peace coming from another. But what are the charts telling us? Let's take a look at that over the next few minutes and see exactly what's going on and whether or not we can actually use that in one way or another to be able to make decisions that actually can make some sense from all of the noise that's actually going on in the markets. Stay tuned. Hello and welcome. This is the midweek edition of what is a very, very confusing story at the present time. And welcome to Strategic Markets. Let's see what we can do to dissect what's going on in relation to the markets at this point in time. Unfortunately, I'm not actually joined today by Yash. He's actually off having a well-earned holiday, but he will be back next week. But you've got the pleasure of me for the present time for today as well as Sunday. But let's have a look at the charts and we'll delve right into it in terms of bringing you some really, really good value as to what's actually been going on in relation to the markets so far. Before we go any further, let's have a look at some of the headlines that have been going on, because I know that a lot of people actually do value that in terms of what actually Yash does bring to the table in relation to that. Firstly, the Wall Street Journal has actually been bringing us some very, very interesting information about the UAE actually wanting to actually force the Hormuz open and is willing to join the fight in terms of persuading the US and others to open up the waterway by any means necessary. So it looks as though the war in itself is actually continuing onwards in relation to that. But on top of that as well, actually was this very, very interesting little editorial by Erin Hale over at Al Jazeera. And she actually mentioned as well that basically after the Strait of Hormuz opens, the turmoil itself could actually still last for several months. Essentially, what she's basically saying is that pretty much along the lines of, well, we can actually clear the Strait of Hormuz overall, but fairly much there's just so much of a backlog that's going on. The global supply chains really will take a long, long time to be able to clear any of that out. So really, there's going to be a lot of backlog in relation to seeing how things actually go in terms of clearing it all out, even if things actually do clear up tomorrow. But essentially what that will basically mean is we're actually going to be seeing quite a lot of this happening for a long, long time yet. And that's really been reflected in quite a lot of what we're actually seeing, even in the charts themselves. If we take a look at the charts, especially when we take a look at Brent Crude, what we're essentially seeing there has been a dip over the last couple of days. And I'll enlarge this chart so you can really see exactly what's been going on. But really, we still are constrained between these 4-hour support and resistance lines that we've been talking about for quite some time. We actually did see a dip right down to that 4-hour support and resistance line, and that only just happened probably over the last couple of hours. And in terms of that dip, we really did see that at about 2:45 a.m. over in New York time, where it really came down and literally kissed that line at $100.90 before bouncing right back off it and respecting it very, very nicely overall. And you can see that from the tail on the daily chart. So it's come down there, kissed that level at $100, like I basically said, and now it's basically finding Brent Crude coming back up to $105.91 right now as we're talking at this point in time, which is about 5:40 a.m. over in New York time. Currently about 8:40 p.m. here in Melbourne. So we are seeing quite a bounce back upwards in relation to Brent Crude, pretty much to around about the midpoint of this range that we're basically talking about overall. So basically back up to $106. In terms of USO, this is where things get very, very interesting because USO has actually maintained itself quite high in the upper range. And even though we're probably going to be opening at about 125 when the New York trading range actually does start in a few hours' time, it's still very, very high on a comparative aspect when we talk about things on a relative basis compared to Brent Crude. So a lot more buying has been occurring overall in terms of USO relative to Brent Crude. So there's a lot more going on there. And we've been talking about this quite a bit in relation to the options market overall. Now, when I was talking about this over on the weekend, options themselves have been purchased higher in terms of the strike prices around about the 135 to 150. Even higher strike prices have actually been purchased recently in terms of April, May, and June, even out towards the 200 mark now. Even a lot more of those strike prices towards the June area are actually being purchased there. So don't be surprised if we actually do see even higher oil prices coming through in the near future. It does seem a little bit odd in relation to things there. You might be looking at things and saying, hey, things are actually starting to actually get a little bit better in relation to the war situation is going on at the moment. But there's a lot of toing and froing going on in relation to the way the war situation is happening there. And if you take a look back at Erin's article, as we just had a look at a few moments ago, well, overall, the way she's even talking, things could actually still play out for quite some time yet. And it looks as though some of those option makers are actually looking at things and predicting that that may actually be the case, and the global supply could take quite a while to rectify itself. Not really playing out that way at this point in time when we're taking a look at the volatility, though. Volatility did come down quite a bit over the last couple of days, and that's reflected in the overall markets, as you can basically see what actually really happened yesterday in the equities, which we'll come to in a few moments. As you can see, the volatility has come down, but still relatively high. Overall, when it comes to volatility, we're still in the mid 20s. Now, like we've mentioned in a few of the previous videos as well, when it comes to volatility, anything above 20 is where the institutions themselves literally do not really partake in much buying of equities overall. They usually pull the brakes on those. So essentially, we're not really going to get too much institutional buying at this point in time until volatility really calms down a little bit more than this. We'd be waiting to basically see the volatility come down here before anything really starts happening in terms of institutions buying any further. In terms of the dollar, until the dollar comes down around about here, well below the current support level of what we've actually been talking about recently as well, this is really still a very major risk heightened atmosphere that we're talking about in relation to the markets at this point in time. One really fascinating aspect that I'm really looking at overall, though, is the bonds situation. And the bonds are still in a danger zone area when we're really looking at things here. We're still testing a prior support area. You could probably even consider that to be really having a really hard look here. If this comes down back into this area here, we are nowhere near out of danger in relation to things with the markets overall. Because overall, until the bonds are coming back well above over at this level up here, above the 88 level at the very least, bonds are really not out of trouble. So when it comes to anything there's no major recovery here for the bonds at all until we've really gotten well above the 88, 89 level. And that's really the truth behind it all. And the reason behind that is you take a look at the yields are elevated. And the yields would need to come well below the 4.1 mark at the very least before we start even talking about everything really settling down quite dramatically. Now, the question on everyone's lips, though, is essentially what is going on with the equities, because we've had such a bounce in the short term. But is this going to be a prolonged recovery, or are we talking about what they like to term as a dead cat bounce? Now, overall with that, we can really see that in the very short term, we had quite a bounce overall in the markets yesterday. Now, when we talk about things there, Dow Jones went up 2.5%. But what does that mean in the long-term scheme of things? We're still in a downtrend. There is absolutely no doubt about that at all. We haven't even gotten above the 15-day moving average and nowhere near above the 200-day moving average on the Dow Jones, firstly. If we take a look at the Russell is probably looking to be the strongest in terms of relative strength, but even that did not get above 15-day moving average, being that cyan line. Sure, it's maintaining itself above the 200-day moving average. That's a good thing overall. But it did not get above the 150-day moving average, being that orange line. But it is one of the stronger ones there. And like we always do say, it's actually one of the most prone to interest rate rises. So do keep an eye on the Russell overall, which is a composite of 2,000 small cap stocks. That's the reason why we keep an eye on it so much on this channel. So definitely do do subscribe and give us a like to let us know that this is of value to you. But on top of that as well, the reason why I basically am suggesting for you to subscribe is to keep an eye on this so you can actually keep up to date with what's the latest that's going on in all of this, because it's very, very important for your own investing as well to keep abreast of all of these changes that are going on all the time, because Yash and I will keep you up to date with what's happening as well. In terms of the SPY, as you can see, have a look at this, okay? When it comes to the SPY, this has not gotten over that teal line there at all, and that's that 15-day moving average we're continually banging on about, okay? Now, overall with that, that's a short-term moving average, and you'd really want to see recovery over this. This red line here is the 200-day moving average. A lot of traders and a lot of investors look at that with a lot of gusto. If you're nowhere near above that, there's a major problem. We still also have downward turning 50-day moving averages here. Now, why is the SPY important? The SPY is the top 500 stocks in the US market. And if we take a look at the QS is the tech-heavy stocks that are in the US market. We're looking at a very similar picture as what we just saw with the SPY. So when you put all of this together, especially if you're new to this channel and you're looking at all of these and you're saying, well, Steve, what does all this mean? There are quite a lot of indicators here, which are still indicating that we're in a very, very strong downtrend that's going on in the short term. Until we get well above all of these downturned moving averages. So really, until we're getting well up above here, where I'm actually pointing the cursor, then we can basically say that we're back into what we would consider to be bullish tendencies. Until we're about up to those areas there, I'm not saying we can't get back up there, but until you start seeing some movement back up towards those areas, we can't really say that we've recovered fully. We might get back up there. I'm not saying we can't, but we need to make some really, really good headway to get back up towards there. They're the kind of things that we're basically saying. We need to see some really, really good headway to get back up there. But one day, that's all we've seen so far, one day does not make a trend, that's for sure. Okay, so we've covered a lot of ground there with a lot of those particular instruments so far. Gold is another one of major interest to a lot of people. Now you can really see that gold is starting to really bounce off a lot of those trend lines that we've just been talking about with the indices and a few of the other areas. It's bounced off the 200-day moving average. It's bounced cleanly now off the 150-day moving average, as well as some of those 4-hour support and resistance lines. So overall, gold is actually doing pretty nicely. It's also bounced off the white line, which is the 100-day moving average. And it's also starting to use these short-term moving averages, being the yellow and the cyan line. That's the 8 and the 15-day EMAs, which is the exponential moving averages. It's using those short-term moving averages to be able to form some base of consolidation to get upwards in terms of some upward momentum. Now it's coming up to test. It's what they call this VWAP, which is the volume weighted average price. This gives an indication as to whether or not the buyers or the sellers are in control. At the present time, because it's trading beneath this VWAP, the sellers are still in control. Once it gets above that level, then you could be able to consider that the buyers are back in control. So let's wait and see what happens from there. And then you've got the 50-day moving average here as well to contend with as well too. So that's the gold futures. This here, the GLD, is the gold ETF, or the exchange traded fund. So they're both usually around in parallel to each other in relation to things there, but that's what we're basically seeing when it comes to gold. And it looks as though gold itself is actually going to open up when New York trading starts up in a few hours' time as well. When it comes to silver, silver has been trading a lot weaker than gold in recent times. Now it looks as though it's actually starting to actually pick up some steam in the upward direction. Maybe gold is actually starting to drag it upwards a little bit now. So overall, it's showing the same kind of pattern as what we're seeing with gold, and looks as though it's actually on the way to improve. Got a long way to pick up in terms of anything there in relation to the way the VWAP situation is going there as well too. This is the silver futures, and then that's the silver ETF as well. So very similar chart patterns we're seeing basically there with those. Now we'll go talk about Yasha's favorite, and probably a lot of favorites here from the channel as well too, in terms of Bitcoin itself. How is this relating to a lot of everything else? Well, actually, it looks very, very similar in terms of the way that it's actually reacting to what we just basically saw with the metals. But in terms of things overall, it's actually responding reasonably well now in relation to these short-term moving averages, and perhaps even towards that 50-day moving average being that blue line. But it has been fairly weak in recent times, as we could see in terms of reacting to this 50-day moving average. So a little bit of caution is very, very warranted overall in terms of Bitcoin. So that's the situation there with the moving averages. It actually had been testing all of these 4-hour support and resistance lines in recent times, came up and tested it in particular. This was last week, failed that test, came back down and actually started testing a lot of these support areas back down here. Looks as though it's actually trying to find a bit of a range now, and actually just today it's tested a prior support and resistance line from back in May 2024. That's this line here, 69,300. You can see the high. If we take a look at this number up here, that high, okay, keep an eye on that as I highlight today's range. The high, 69,286, let's say, okay, rounded up by 1 cent, okay? So overall, it's just underneath that particular resistance line of $69,289 by about $5, okay? So it's gone up, tested it, and now it's trading beneath that level. It's currently $68,648. So these support and resistance lines do matter. That really, really is quite important. There are a lot of people out there who do take a look at technical analysis, previous support and resistance lines, and they basically go, nah, this stuff doesn't work. Overall, these support and resistance lines really do matter. They are prior levels where people do a lot of buying and selling, and they do actually make a difference in relation to people's psychology. So it really, really is quite an important area to think about, and also have on your charts overall. So these areas are of major concern. So whether or not this will actually break through this area, we'll wait and see. It could. The interesting thing about it, most importantly as well, is in terms of Ethereum overall as well. We've been talking about for quite some time as well with Ethereum, the 2100 mark. Now, for some reason as well, lines are coming up here as well too. You can always have a look back on the previous videos as well. They are there. But the 2100 mark for Ethereum has been a very, very big line in the sand. In relation to that, it's now trading above that area, which is actually quite a good strength point for Ethereum at this point in time. And Ethereum may actually be starting to drag things up in relation to cryptocurrencies right now. So keep an eye on that as to whether or not that actually holds and maintains itself. In terms of the banking index, that banking index is actually starting to improve itself as well. And we've actually been talking about that recently as well too. Whether or not they're actually starting to correlate with the cryptocurrencies at this point in time, something to keep an eye on. So there's a lot of things going on in relation to all of these different instruments at this point in time, which is making things quite an interesting space in relation to all of these aspects. But at the end of the day, really keep an eye on Brent Crude being your major catalyst. And as you can see, even as we've been talking, it's still increasing. It's still actually going up and up and up and up and up. In fact, the candle for the day has actually now turned green, and we're actually almost about to approach $107 per barrel at this point in time as well too. So I wish you all the best in terms of the rest of the week. Really keep an eye on things, especially in terms of those 4-hour support and resistance lines that we were talking about earlier as well. And definitely keep an eye on all of those in the context of everything you're actually hearing in the media. Not everything is reacting exactly as we are expecting at this point in time, especially in terms of the way we would be expecting the war to be potentially ending or continuing onwards as well. And there's a lot of differing opinions going on. Iran's basically saying, okay, yep, we're interested in potentially ending the war with some caveats. Israel is continuing to bomb, especially in terms of Lebanon and Beirut. So a lot of things are actually still going on. US potentially, they're always saying, yep, okay, we're interested in ending the war, but no, everyone's saying, well, hang on, do we believe more than not? There's a lot of things happening overall. Keep an eye on what the charts are telling you. They are really actually trying to tell you the story as to what's going on. And as I said before as well too, ensure that you definitely like and subscribe. We'll keep you up to date as to what's happening each and every moment of the way in terms of on Wednesdays and on Sundays. And let us know exactly what you're thinking as well too. And we'll be more than happy to put that into our coverage as well for you. Until Sunday, I'll catch up with you then. In the meantime, keep trading safe. See you then. Bye for now.